My name's Priya Lukka, and welcome to the final session of today. What a brilliant day one has been. We've had an afternoon of really thoughtful discussion and challenges and hope too for debates on moving tax equity into the mainstream. So welcome to the final session of today. We're talking about tax rights and racism today, and our keynote is by Professor Dorothy Brown. We do have the live discussion button in the bottom right hand of the screen, so please do ask questions away to the speakers and we'll take the questions in the second half of the session. So just to introduce today's panelists, we have Professor Dorothy Brown, who is the Asa Griggs Candler Professor of Law at Emory University. For decades, our keynote speaker has been doing trailblazing work in tax and racial justice. And this year, she published the seminal book, The Whiteness of Wealth, how the US tax system impoverishes Black Americans and how we can fix it. We're honored to have you here with us, Professor Brown, and for you to share your insights on policy reform in the US. Of course, there are huge gaps in knowledge, gaps in the area of tax and racial justice in many countries. And in this session, we're also joined by Keval Bharadia. Keval's a political economist and has looked at the roots of capitalism and the dishonorable roots of taxation itself. We're also joined by the wonderful Guppi Bola, a racial justice busy bee committed to building an economic democracy to facilitate collective healing. Guppi and Keval have been doing work with the Tax Justice Network, the Tax Justice UK organisation, and Decolonizing Economics, which Guppi co-founded on some foundational research to kickstart work in deep reform by identifying policy reforms aimed at tackling structural racism in Britain, which we're also going to hear about in this session. So without delay, I'm really honoured to hand over to Professor Brown.
Thank you so much. Thank you for that wonderful introduction. And I'm really looking forward to the conversation we'll have on the second part of today's session. So I'm going to talk a little bit about my research, the reaction that I should say, the negative reaction that I've received from some of the research, as well as what might be possible in moving forward in the US with respect to tax reform. So my book, The Whiteness of Wealth, is broken up into several chapters, and I'm just going to talk briefly about the research in each of the chapters. There's a marriage chapter, a homeownership chapter, a college chapter, a jobs chapter, a legacy chapter, and what potential tax reform plans going forward might be worth considering if what we want is a tax system that doesn't enhance white wealth, but instead enhances Black wealth building. So let's start with marriage, which really is the first thing I ever wrote about race and taxation. And I'm going to start with saying the US IRS system, Internal Revenue System, that is the mechanism in the government for collecting tax returns and processing them, they don't publish statistics by race. So when I decided to write about race and tax, I didn't even realize that the IRS did not publish statistics by race. So how on earth was I ever going to publish anything? Well, I had to become a detective, and I would read material on race that had nothing to do with tax, but bring my tax lens into it. And I came across a report on the status, the economic status of Black women. And there was a line in there that said, married Black women contribute roughly 41% to household income, and married white women contribute 29%. Now, to someone who's not a tax geek, it wouldn't mean anything. But to me, I was basically jumping out of my seat because I knew that the joint return, which is a filing mechanism, right, for married couples, the joint return disadvantages two equal wage earner households. If two spouses earn roughly equal amounts, the tax laws in America don't help them. If one spouse earns 100% of the income or close to 100% of the income, the tax laws benefit them. So that statistic that said married Black wives contribute 41% to household income told me that the penalty for marriage was going to be disproportionately received by Black married couples like my parents. So that sentence was nice, but it wasn't necessarily going to hold up an entire article. So what I did was worked with an institute at the University of Cincinnati, where I was teaching at the time, that looked at Census Bureau data for the entire United States of America, pulled out married couples and pulled out white married couples and pulled out Black married couples. And lo and behold, the research in the Census Bureau proved what I thought it would, which is mainly at all income levels, married Black couples are more likely to be in 50-50 or 40-60 households, which means they're going to pay a penalty. But married white couples are more likely to be in single wage earner households where it's 100-0 or 90-10 split. They get a tax cut when they get married. So here we have just one provision, the joint return, that as I did research for the book, I found out came into existence because of a rich white couple named Charlotte and Henry Seaborn. At the very beginning of our modern US income tax system, the only people who paid taxes were rich Americans. Everybody else didn't pay taxes because they didn't earn enough money. Well, the rich Americans were white Americans, and they didn't like the fact that they were the only ones paying taxes and they had wealth. So they would then engage in schemes or ideas to decrease the amount of taxes that they paid. And one of their schemes was Henry Seaborn deciding to just treat his wife as if she got half of his income. And because we're in a progressive tax system, splitting the income between those two cut their tax bill. Well, there was one problem. The law didn't allow it. So the IRS said, you can't do it. And they fought in court and went all the way up to the Supreme Court that said, yeah, you can do it. Fast forward to 1948, Congress decides to make what the Seaborns got applicable across the country in the joint return. And ultimately, that caused married Black couples to pay higher taxes. So it's an example of tax policy in the US built on white norms, how white Americans did marriage, not how Black Americans did marriage, because Black wives always worked outside in the paid labor market more than white wives. So one point I was presenting this research at a tax professor conference, and the first comment was directed at me, and the academic said, well, Dorothy, everybody knows your work is irrelevant because Blacks are poor and don't pay a lot in taxes. So this was kind of the norm, right? I would often get criticized for writing about race and tax when the profession recognized class, but thought race had nothing to do with it because after all, as this person said, Blacks are poor and don't pay a lot in taxes. The problem, however, is most Blacks are not poor. And even if you want to focus on the poor who are Black, we have something called an earned income tax credit that has significant penalties if you're married. And as your income increases, the tax credit decreases such that the tax rate on low income taxpayers eligible for our earned income tax credit is a high marginal tax rate. So even poor people wind up getting disadvantaged with tax policy. So the next chapter in the book is on home ownership. And what my research showed, well, first I want to talk about, again, IRS doesn't publish statistics on race. So I had to go to sociology research to look at how home ownership operated on the ground between white and Black Americans. And what I found out was depending on how many Black Americans live in your neighborhood determines how much your home will appreciate. If you're in an all white or virtually all white neighborhood, that's where most of the home ownership appreciation is. And that's where most white homeowners want to live. If you live in a racially diverse or an all Black neighborhood, you don't get as much appreciation out of your home. And what The research also shows is if you sell your, the research also shows that there's a different tax treatment for selling your home at a gain versus selling your home at a loss. Selling your home at a gain, there you can get up to $500,000 of gain tax-free. But if you sell your home at a loss, you don't get a tax break. And I know it's going to surprise you, white and Black Americans don't do homeownership the same way. Most Black Americans live in racially diverse or all Black neighborhoods. And in those neighborhoods, Black homeowners are more likely to sell their home for a loss. If you live in an all white neighborhood, you're more likely to sell your home for a gain and a tax-free gain up to $500,000. So if you want to get equity, if you want to get wealth out of home ownership, in theory, you want to live in an all white neighborhood or be one of the only Black families in the neighborhood. But there are problems with being the only Black family in the neighborhood. You know, there are lots of newspaper reports that tell us that white neighbors don't know what their Black neighbors look like, so they call the police on them when they're just trying to get into their own home. If you have a child that goes to a school, then you have teachers that will see your child engaging in the same behavior that white peers do, but the teacher calls your child out. Suddenly, your child is in detention or your child has to go see the principal. So there are issues that I call racism triage that Black homeowners have to deal with if they want to be that one Black family in an all white neighborhood so that they can have the opportunity to get up to $500,000 of tax-free gain. Well, this is another example of how did we get this provision that gain on the sale of a home should be tax-free? Well, it dates back to the 1950s when the defense industry in the United States was gearing up and they needed workers to move from one part of the country to the other. Well, the 1940s had been a time where the federal government was helping white Americans become homeowners. So for the first time in 1950, we have a majority of white Americans are homeowners. And if they want to sell their home and move to get a defense job, they're going to pay taxes. Well, tax policy said, no, you won't have to pay taxes, right? So tax policy in the early 1950s helped white Americans who were homeowners. A significantly lower percentage of Black Americans were homeowners. And we know the defense industry wasn't gearing up to hire a lot of Black workers. It was all about white workers who happened to be homeowners. So this piece, my research on homeownership, I'd say got more pushback than virtually anything else I've ever written. Why? Because white law professors like to think of themselves as progressive, as liberal, as good on race. And what my piece told them is they were living in these all white neighborhoods, let's be clear. And they wanted to say, oh, it wasn't about race, it was about all these other things. But the research showed that it really was only about race. So they didn't want to believe this wealth gap was about race. They wanted to believe it was anything else. And one academic said to me that it was actually a good thing that the house in Black neighborhoods didn't appreciate that much because it meant other first-time Black homeowners could buy in the neighborhood and buy a cheap house, which was mind-numbing to me because who wants to make that much of an investment, which is what it takes to buy a house, to have very little upside? And besides, if it was such a good investment, we would see lots of white homeowners doing it, and we don't, right? So I got a lot of craziness with respect to the homeownership piece because it just made the academics lose their minds, basically, because they didn't want to face the reality that they, in fact, were living, had homes in these all white neighborhoods. Well, the next chapter in the book deals with college. And this was the first thing I'd written about college. So this was new for me. And the research on college was awfully difficult to locate. There isn't anything in one place, right? So I looked for debt loads. I looked for gifts and inheritances that pay for college. And it was an amalgamation of sources that led me to the overall conclusion, which is Black Americans who go to college are more likely to leave with higher debt loads than their white peers. If their white peers leave with debt, it's lower and they pay it off quickly. If uh, and also their white peers are more likely to have parents and grandparents who pay for college. So that the tax subsidy for debt load is you get an interest deduction for student loan debt, but it's capped at $2,500. And if you look at the high debt loads of Black Americans, the $2,500 doesn't allow a lot of Black student debt loan holders to deduct all of their interest. Whereas if you look at what the typical student loan debt for white borrowers were, you see that they can amortize their debt and pay and not reach the cap of $2,500. So what we see in tax law for higher education is limited subsidies if you pay for it yourself, and unlimited subsidies if somebody else pays for it. So gifts and inheritances that your relatives pay for your college is tax free. So this chapter was, I think, the most depressing for me because I came across the statistic that showed 60% of Black Americans who start college don't graduate. 60%. But they often leave with debt. And the whole theory behind taking on debt to go to college is you graduate and you get that better paying job. But if you leave college with debt and no degree, you have the debt and you don't have the better paying job. So this chapter, the pushback that I've gotten from folks who have heard about it or read it is by white Americans who say, I didn't have anybody pay for my college. I paid for it myself, which of course has nothing to do with my chapter, right? My chapter doesn't say every white person has their college paid for. My chapter says that lots of white Americans have their college paid for, and it's paid for in a tax-free manner. The other piece of the tax subsidy is not-for-profit colleges, Harvard, Yale, Emory. What we see is those institutions with huge endowments that pay very little taxes and without the 2017 tax cuts, it was zero taxes, but now it's a small amount of taxes. Those colleges and universities are not welcoming places for Black Americans, but they have this tax subsidy that basically goes for the benefit of their majority white student bodies. So even though these institutions would tell you they're doing so much better, they're doing outreach, they're doing all these things, in the last 30 years, the enrollment of Black students has not budged. So what we see is this tax subsidies for these very rich billion-dollar endowed institutions, and those tax subsidies are not going for Black students. In fact, one of the programs that helps Black students are our Pell Grants. And our Pell Grants have not kept up with inflation, and they pay for very little of college. So one suggestion I have is we should tax endowments of very wealthy institutions and fully fund Pell Grants so that Black students could actually, with need, could graduate college debt-free. The next chapter is about jobs and looking at the tax-free benefits that come with good jobs, health insurance, retirement accounts. And what the labor market shows us is there's occupational segregation. There are white jobs and there are Black jobs. And it's not going to surprise you at this point. The white jobs tend to be the ones that come with tax-free benefits like health insurance and retirement accounts. The Black jobs tend to not come with those. And even when you have a Black worker who works for an employer that provides these benefits, Black Americans are less likely to participate. Why is that? Because our money goes elsewhere. Research shows Black college graduates are more likely to send money to their parents. White college graduates are more likely to receive money from their parents that they then use to build wealth. Black college graduates, on the other hand, are ones financially supporting extended family members who were the victim of Jim Crow, who were the victim of illegal segregation, illegal race discrimination. Because of that, we are less likely to participate in our retirement accounts. But there's also research that shows equally qualified Black college graduates have a harder time getting those good paying jobs. They have to send more resumes in order to get interviews. And when they're offered positions, they're offered lower paying positions, even though they are qualified and applied for higher paying positions. So one of the solutions I've suggested is, well, if an employer is discriminating in how they pay wages, then perhaps we should not allow them to deduct their wages. I got a response to that. You're turning the IRS into the Equal Employment Opportunity Commission, and that's wrong. And what's interesting about that comment is, I'm turning it into the EEOC, is Congress itself passed a law that said you cannot deduct compensation unless it's reasonable. Well, why couldn't we define reasonable as not discriminatory on the basis of race, right? Of course we could. So when Congress says you only get a deduction for wages if it's reasonable, it really causes us to think, well, what's reasonable? Is discriminating on the basis of race reasonable? It shouldn't be. Okay, so that's the jobs chapter. And then the legacy chapter, how do white Americans build up wealth compared with how Black Americans build up wealth? A lot of inheritance, a lot of family financial transfers from the parents. The parents pay for their grandchildren to go to private school. Therefore, the parents don't have to pay for it. Therefore, they can save money and invest. Whereas Black Americans, I mentioned before, less likely to get an inheritance. And when we do, we are less likely to be able to use the inheritance to build wealth. Why? Because we're usually using it to support extended family members. So the pushback I often get here is, well, I didn't get an inheritance. And it's really interesting when white Americans push back on the notion that our tax system is designed to help build white wealth. Is I know if I had a 10-minute conversation with them, I could quickly pull out where their whiteness helped build their wealth, right? They don't see it, but if you talk with people, as I've done over the years, within a few questions, I can see it. So that's usually I didn't inherit it. And actually, there are white families that I talk about in my book. They didn't necessarily inherit it, but they got a loan that enabled them to buy real estate in New York that, skyrocketed in value. Or they had a friend who worked in the stock market and taught them how to invest. So there are lots of ways that whiteness helps you build wealth that there just isn't that access for Black Americans. So I want to close with talking about what might be next in US with respect to race and tax reform. So first, when the book came out, I was approached by Congress to testify. I testified before the Senate Finance Committee and I testified before a House committee. In 20-something years of doing this research, I've never been asked to testify before Congress. So I will say that the publicity that the book has gotten has caused some people in Congress to take notice and to be interested in thinking through how we might publish statistics on race and tax. President Biden in January of this year signed a racial equity executive order, which told his government, the political appointees in each of the branches of government, each of the departments, to disaggregate data by race. And of course, the department I'm most interested in is the Treasury Department, because they put out lots of statistics, none of which have anything to do with race. And I must say the Treasury Department is giving me no cause for optimism, because they've done nothing so far. They've talked, but they've done actually nothing. So I'm cautiously optimistic that something could come out of Congress, as well as the president could decide to make it clear to Treasury that they have to make race and tax statistics a priority. So I'm optimistic and pessimistic all at the same time. Thank you.
Professor Brown, it's been so insightful to hear you talk. You talked to us about the experience of Black couples, home ownership, college graduates. I'd like to ask you, where do you think that system fixes begin? Where do we start in the process of system fixes, which you talked about a lot in your work as well, particularly with the more systematic takedown of critical race theory in both of our contexts, in the UK and the US more recently, and of course the seminal work there of Derek Bell that you've talked about as well before?
So, this is a systemic problem, so we need a systemic solution. Now, in each chapter, I call it small solutions. So the solution to the joint return is to just have individual filing, have marriage not change our tax bill. The solution to home ownership, in my opinion, is getting rid of these subsidies for home ownership that disproportionately benefit white homeowners. With college, I think I mentioned we should start taxing these private institutions that are very wealthy and fund Pell Grants and other things. With respect to jobs, we should have employers required to publish statistics, do an audit, their own audit, and publish statistics on racial disparities in pay and racial disparities in take up on retirement accounts and health insurance. And we should think about taxing gifts and inheritances that go to wealth building and not go to supporting extended family members. So there are individual changes, and then I think there are bigger changes. So to me, the solution is a radically different tax code than we have now. It is kind of going back to basics, what we had at the beginning of the 20th century in the United States, where we would have very few loopholes and deductions, and only if you made more than a living allowance would you pay taxes. So that it would basically have one rate, well, it would be a progressive tax rate, but one rate system that would apply whether you ran Amazon or whether you worked in a warehouse. So we would tax income from capital the same way we tax income from labor. And yes, you're right, there's this pushback against talking about race, period. And I think it's time for allies to step up and say, and when I say allies, white allies, to step up and say, one, we need to teach real history in school. If you want to talk about what's going wrong, it's talking about slavery, for example, as something that benefited the slaves, right? We were kind to the slaves. That's what a lot of history books in America say. So if we want to get real, then we can talk about, our history books, they don't tell the truth. Let's talk about telling the truth. And to push back on the notion that we cannot talk about race because the IRS has not talked about race and it hasn't stopped Black people from paying higher taxes. So not talking about race is a design mechanism to maintain the status quo of white supremacy.
Thank you so much. I'm going to hand over now to Keval to speak to us about his work.
You have to unmute.
Thank you. Thank you, Professor. Can you hear me? Yeah. And congratulations on the launch of your book as well. It's a much needed it's a much needed narrative changer actually in global political economy. And I just, stay strong is something that us Black and Brown allies need to produce and talk about more so, given the attacks that we're under just by talking about race. I'd also like to thank Tax Justice Network for bringing this event together, and especially Naomi Fowler, who has been instrumental in getting greater focus on anti-racist tax programming. Tax justice campaigners, as Priya said, asked me earlier this year to look at the issue of tax and racism. And I think to do this, we have to understand the origins of racism, as Professor Brown was saying, alongside economic, political, and cultural hegemony. Racist ideas were carried from the 15th century Europe and developed by its merchants, slavers, and colonizers. Racial superiority of white people over Black people was developed initially to justify the enslavement of African people, and eventually to justify all the ways in which non-white people were exploited by white colonial powers for centuries. Hand in hand with these developments, and over the years, a whole body of scientific arguments was developed and used to justify the mass genocides by colonial powers on the myth of race. Second, we know that the development of capitalism, our economic system of the day, was developed through slavery and colonialism. Slavery and colonialism enabled a small class of people to own the means of production, that is land, resources, factories, properties, and now patents and financial capital, etc., which causes vast accumulations of wealth and power we see, and created an underclass. Before enslavement and colonialism, there was no global hegemony. Following enslavement and colonialism, the world is now owned and commoditized, and a singular hegemony of capitalist development occurred. The world has to work for a living to find employment, to earn a wage in order to simply live and reproduce on the lands that we once shared collectively. So capitalism, bizarrely and fundamentally, enables a person to possess a greater share of the world's natural wealth that their money can buy. So when we think of tax, we cannot separate tax from capitalist exploitation. The tax system cannot be reformed for our emancipation because it is part of capitalism. We know capitalism and the tax system creates inequalities. We know capitalism and the tax system goes towards creating an anti-democracy that maintains European and US hegemony. And with it, the government-sanctioned creation of billionaires, financing of fossil fuel plants, and dumping of vaccines because they couldn't reach adequate trade deals. We know that the majority of political party donations come from the finance sector, and they and governments on both sides of the houses in Europe and the US and elsewhere are very much invested in protecting the status quo. The status quo is capitalist exploitation and its associated imperialism, which no mainstream political party is tasked to upset. These are just some of the features of our world economy and capitalism that we often talk about, and I see many people struggle to embed within their campaigning. But these are important fundamental issues for anti-racist tax justice. We all understand quite well how the tax system of our current political economy privileges those with capital who are able to access the latest innovations in investments and accounting to maximize returns, and how this wealth buys you power. Not power to dismantle it, but power to make policy and capitalist exploitation worse that can only be achieved through racial imperialism. It is not a mistake of capitalism, but one of its features. Despite us knowing the system needs to be replaced with a democratic alternative, we sure spend a lot of time inadvertently maintaining it. The majority of discussion among civil society organizations and policymakers is about how Black and Brown people participate more in this exploitative system. Are we trying to level up to the 1%? Are we aiming to close the racial wealth gap to the 1%? What we must be is interdisciplinary in our approach to race and tax. First, there are the environmental economists who already tell us that the world cannot sustain 8 billion middle-class people. We would need 8 Earths for that to happen. Yet this is what tax and economic campaigners are in fact saying when they campaign for wealth building without systems change and degrowth. Capitalism collapses without growth, yet perpetual growth on a planet with finite resources leads to environmental calamity. Capitalism has made parts of Earth irreparable. So if we are trying to get more wealth, which would lead to more production and more consumption under capitalism that kills our people and planet, what's the point? Building black wealth and more black middle classes maintains and expands capitalism, which reproduces racism for capitalist expansion, and so on and so on. It is a liberal dead end to advocate for creating black wealth and more black middle classes without addressing at the same time that this leads to greater misery in the global south. Can a policy proposal be anti-racist if it does not draw attention and create the urgency for a systemic change away from capitalism and towards collective emancipation, freedom, and democracy? No, it can't. Exploitation and suffering do not disappear under capitalism. Imperialist exploitation and suffering shifts onto the next group of people to racialize, demonize, and terrorize. Which brings me to the second discipline. The political economists inform us that in order to maintain capitalism, which don't forget is exclusive control of land, resources, and the human body, it requires violence and subjugation of groups of people. That violence, firstly and foremost, is racism. It was and still is black and brown people, their lands, their resources, and bodies that are first in the firing line for capitalist exploitation. US and European racism at home and imperialism overseas are the ways our governments, all to enforce capitalism and maintain imperial power and global hegemony, operate. We live in an era of mass surveillance, military interventions, and coups d'etats used by colonial powers, especially the US and the UK, to enforce a capitalist development orthodoxy. Third are the black radicals, the black Marxists, the global South anti-imperialist thinkers whose research informs us that capitalism is inherently racialized. The black radical tradition and critical race scholars slam liberalism because it is also part of the status quo. Liberalism flaunts itself as the progressive, kind, and logical center ground. But liberalism, stemming from the so-called European Age of Enlightenment in the slave and colonial era of Europe, is still entrenched in capitalism and private property. Believing in liberalism means, whether liberals like it or not, in maintaining racial imperialism by Western governments. There is no center ground under capitalism. If one is liberal, they're invested in a capitalist world order, and no amount of reform to capitalism will make it less deadly. It is therefore a liberal dead end to believing that the pathway to making the world free of racism is working with our corporate or political class. No collection of clever arguments, evidence of harmful investments, and presentations of facts and logic that campaigners exert enormous energies on will ever usurp the violent hunt for profits, which causes war, famine, or vaccine apartheid, for example. If we really want to build an anti-racist tax program, we have to look at it through the lenses of the black radical tradition, the black Marxists, anti-imperialist writers, the heterodox political economists, and of course the environmental economists for answers, of which there are many. What this interdisciplinary approach tells us is that capitalism is, amongst other things, inherently violently racist, undemocratic, and unreformable, and unsustainable. I want to end with this. Capitalism is haunted by the memory of every one of the millions and millions of Black people, natives, and indigenous people who were slaughtered, scalped, drowned, raped, tortured, hung, and who died from exhaustion to make Britain's and the USA's wealth and hegemony. The idea that any person of African descent, person of color from a colonized country, or in fact anyone outside the top 1% in wealth should pay any taxes at all anywhere in the world, at least while there exists millionaires and billionaires, is an affront to our human rights and the platform from which I think we need to fight. Thank you.
Thanks so much, Keval. And I'm now going to hand over to Guppi.
Great, thank you. This was good because I didn't actually get to hear what Keval was going to talk about, so I can slot out a few things and we can go to questions. So my name's Guppi. I'm one part of a duo called Decolonizing Economics, alongside my organising partner, Noni. We're a very small team with very big ambitions, but for the sake of time, I really encourage you to go to our really fancy new website to go and check out our About section and our offerings, because we're running a series of events in the next few weeks. And we've also got a crowdfunder where we're trying to raise £10,000 for a racial justice organising program. But I'm going to dive straight into sharing how we think about decolonising the economy in relation to the tax system, and how we feel this contributes to our overall mission in bringing about an economy that is rooted in racial justice. The first part of our theory of change is to divest from whiteness, and that is to identify the ways in which our modern financial infrastructure continues to drive wealth into whiteness and block access to wealth in largely Black and people of colour communities. And it was really great to hear Professor Brown talk about how she's looked at this from the US perspective, and it is really, really necessary for us to do this in the UK. To begin, our approach is that we invest time in interrogating the data by bringing an intersectional lens to racial wealth inequality. And when we look at racial wealth gap today, we learn that while race developed as a social construct, as Keval had mentioned, it had a real and ongoing impact in creating hierarchies between different ethnic identities, not just between white and racialized communities, but within racialized communities as well. The distribution of wealth reflects complex and often ignored nuances that lead to progressive campaigners promoting policies that rely on the ongoing racial oppression of marginalized communities. So just to remind ourselves of the situation in the UK at the moment, the most essential reading is for everyone to read the Runnymede research Colour of Money, which is a report that indicates that the greatest wealth inequality is felt by Black, Caribbean, Bangladeshi, Pakistani and Black African families in the UK. And it shows that for every £1 held by white British households, British Indians, so the majority of the speakers on this panel who are of Indian descent, hold 90 pence, and every other ethnic identity owns less than 20p. And I have a whole host of other stats that are indicators of wealth. I'm gonna, if I can, let's see if I can drop it into the chat box without losing my, so you can read that. There we go. And then move on. So we can't unfortunately go into this in much detail right now, but there is something significant about the proximity of British Indians to white British households when it comes to wealth, and the ways in which British Indian experience has been complicit in upholding ideas around racial hierarchies in order to make it within a racialized society. We just have to look at the Cabinet or the Times 100 list for us to be able to see that when I refer to the ideas of wealth in whiteness, I talk about whiteness and not the literal identity of being white. To understand that there are multiple dynamics at play within our so-called BAME community, so that we can ensure that we are challenging that colonial mindset of racial hierarchies that furthers the ideas that there is an idea of a model immigrant or an undeserving community. And I feel like I'm being really hard on my people, but I think it's really, really important for us to recognize that, and something that I think many people feel uncomfortable talking about. So then once we've got that analysis, we move on to the sort of historical perspective. So we begin looking at evidence of historic economic policies and practices that help develop these patterns of structural inequality. And I'm longing for someone to create a wealth extraction timeline that shows how white British families built their millions through several mechanisms, including, and you all know about these, pension payouts to widows of slave owners, gifts to major cultural education institutions, insurance payouts to shipping expeditions, returns made on investments in plantation products, low interest loans to fund expeditions that were hedged by the Bank of England, as well as the remnants of the system, such as the tax haven network, that has enabled wealth to continue to be extracted from the global south communities and marginalized communities in the UK without any form of accountability or interrogation, or very little, because there are campaigners who are trying to work on this. Whilst we're investing in that historical analysis and research, we have also begun to organize within institutions that maintain wealth and whiteness. So there are hundreds of thousands of these, particularly in the UK. Includes institutions such as the British Museum, the National Trust, V&A, educational institutions such as Oxford and Cambridge University, who have functioned through sizable endowments that are rooted in slave money. And the area I'm particularly interested in right now, which is investigating the role of charitable entities and philanthropic institutions who supposedly exist to fund social justice work, but are actually complicit in maintaining the power structure within the economy. And just to remind ourselves why this is important to tax justice, in 2019, a report by Daphne identified that the total number of public benefit foundations in the UK was 12,000. The total pool of assets collectively was 74.66 billion euros. The total expenditure, which included both their operations and their grant giving, was 4.68 billion. So like a tiny, tiny, tiny fraction of what actually exists within the endowments. And with these figures, we have to really question what kind of systemic change we can create when we are relying on handouts from a financial infrastructure that enables tax avoidance, relies on the extractive economy to continue to accumulate wealth, and keeps that wealth held in undemocratic institutions that are so often white-led. And this form of institution is a major block to democratizing wealth and resources for racialized communities, and that's one of the areas that we work on. Okay, so decolonizing wealth within philanthropy. We recognize ourselves as being part of an emerging movement to decolonize wealth, and the focus is on endowment repatriation. Repatriation campaigns ask for private endowments to be returned to the control of people and communities. Much of philanthropic wealth in the UK can almost certainly be traced back to industries that relied on extraction and exploitation that happened both here and abroad, such as, I mean, actually Keval's already talked about all of that, so I'm not going to have to mention it, but you know the picture, you should be aware of the picture. Unfortunately, grants alone that represent a fraction of those total assets are completely insufficient to eradicate the harm that has been caused over those many hundreds of years. And if we want to consider what repair looks like, we need to see them as redundant in a future economy that is rooted in racial justice. And so begin seeing more commitments about transforming endowments through philanthropic institutions. We've seen a statement from JRCT, and it's now waiting to understand what their repair process is, and hope that other organizations from the UK come on board in that process. And so finally, our vision is to contribute to the struggle for reparations and build a solidarity economy. And I've chosen philanthropic institutions as an example of how we begin thinking about reparative justice within the tax system, because by definition, philanthropy is about an infrastructure that is necessary to redistribute resources. But to embody the principles of racial justice within the tax system, we need to both dream beyond the idea that marginal payouts within the tax system equate to systemic change, whilst also recognizing that the policies and campaigns that we develop need to be pragmatic towards people's experience of poverty and wealth inequality today. So there has to be a mixture of let's move money as soon as possible, but also let's dream big. I think it's incredibly important to recognize that whilst the tax system has been largely seen as a redistributive mechanism, we cannot continue to rely on that redistribution of wealth that is basically generated from a system that requires the ongoing racial oppression of communities from the globe. Identifying radical and transformative tax policies requires us to know how we are divesting as much power as possible from the extractive economy and investing in deeply democratic institutions. That is why ideas such as the financial transaction tax are so exciting if applied effectively, because they do that rebalancing of both divestment and investment. And to finish, I just want to share one of my favorite quotes, which I mention all the time when I do public speaking because it's great, by Adrienne Maree Brown. Imagination is one of the spoils of colonization, which in many ways is claiming who gets to imagine the future for a given geography. Losing our imagination is a symptom of trauma. Reclaiming the right to dream the future and strengthening that muscle to imagine together as Black people is a revolutionary decolonizing act. So if we are to decolonize the economy, we move towards a practice of continuing to ask questions of where the wealth comes from, whose wealth is it, and therefore who has to determine what happens to it. Reparative justice is about repair. And in order to dream about a tax system that can embody racial justice principles, there are going to have to be many more Dorothy Browns leading research and policy within the UK in order for the muscle of imagination to sit within those who have been, from whom it has been historically stolen. And I really hope that the work we're doing at Decolonizing Economics is contributing to that future in some way. Thank you.
Thank you so much, Keval and Guppi. We've got some questions that have come through for Professor Brown, so I'm just going to read them out now. Robert Palmer's asked, he'd be interested to know why the IRS doesn't publish stats by race. Marie-Louise Aren has said, would you recommend tax and race research be extended to countries where this happens too, where tax benefits race in particular? And Alex Cobham has said, the great presentations show a powerful tension between seeking greater progress for racialized and minoritized groups under current arrangements versus going in for a completely different system. It would be great to hear your thoughts on how that tension could be resolved, if at all. And I think I'd add in there, Professor Brown, that we do know that people who have tried to step out of the mainstream tax system, big public figures, like, for example, in the US, the case of the American artist Lauryn Hill, who decided to make a big statement in questioning the legitimacy of the tax system, saying that it wasn't ancestrally derived from her history, and got the full wrath of the IRS. So what do we do? Where do we begin when we have a big systemic comment to make and we want to use what we feel is our power, but we know that the systemic power around us is so much more stronger as well?
Okay, so why the IRS doesn't publish statistics by race is a question that I can't answer because they've never said why, right? They have published statistics on gender, they've published statistics on age, but they've never published statistics on race. And the IRS commissioner has testified recently, like in the last month or so, that that's not the IRS's job, that that's Treasury's job. So it's a lot of finger pointing, but I think now is the moment where people are going to be holding the IRS commissioner as well as the Secretary of Treasury accountable. The second question, Priya, I forgot. The second question, should other countries be doing it, right? The answer is yes, yes, and yes, because how do you know what potential problems there are if you don't look? And when you look, then you learn and you figure out what your solution is. So absolutely, I think this should be done more, not less. I think the states, for example, in the United States should take up the charge on who's paying sales taxes, who's paying excise taxes by race. So yes, we should have more of it, not less. And in terms of how do we fix it, what's the tension? In my chapter on solutions, I talk about Black taxpayers who gave themselves a tax credit for racism, and they wound up in prison, right? So my book, The Whiteness of Wealth, gave lots of examples of white Americans who broke the law and got rewarded for it with a change in tax policy. But when Black Americans try to take what they called a reparations credit, the IRS threw the book at them. So I believe we need to fight smart, right? And the civil rights tradition includes going to jail, civil disobedience, right? But in terms of what the potential solutions are, I think we should think big and we should also think small, that we should have multiple tracks and not think there's one right way to get it done, that what we want is a transformed system, and we don't know what that looks like, or we don't know what it's going to take to get there. So we should try lots of different things, and we should talk about specific changes like the individual filing, and we should also talk about a transformed tax system. So I think it's an and approach as opposed to an or approach.
Really, really interesting. We are quickly running out of time, so I just wanted to give 1 minute to both of the other panelists to offer any final reflections, and then over to you, Professor Brown, again. Guppi, did you want to come in, please?
I mean, I really don't have much to add other than I've appreciated a lot of the kind of like emergence of new research that's happening around this area. And I really appreciate Tax Justice Network, actually, who have been facilitating and hosting really incredible international conferences on this. And I think the international and global solidarity approach is really important. There is so much work to do to transfer academic knowledge into accessible and inclusive information for campaigners to use. We work with community organisers and racial justice campaigners, and a lot of our work is just in that translation process, so that it's something that they have that represents the language of organisers, as well as gives a reflection of the world that they dream in. And yeah, I want to continue to do that work. So just to give you a picture of what we do as a group, that's what we do. And if you're an academic or a policymaker, or you are also an organizer, then yeah, really happy to just keep talking and hope that more spaces like this open up. And if anyone is in philanthropy who is listening and is interested in interrogating their endowments and looking at the history of their endowments and then developing a strategy for it, there are loads of really great groups and individuals who are also supporting that work to happen. So yeah, that it was all just, the chat is really good. It's really great to be in the same space as Dorothy, and there's also loads of work to do. So we just got to get moving. Yeah, that's all I want to say.
Thank you. And final reflection for a minute from Keval.
Thanks, Priya, and thanks, Guppi, and Professor Brown as well. I think the only thing that I'd like to say and end on, perhaps, is that we have to start linking up grassroots movements in the global south who are already and have been doing anti-racist, anti-capitalist, and anti-imperialist work for a very, very long time. And CSOs in advanced capitalist countries that are serious about racism have to provide the space for those voices to come in. They have to put their colonial pockets where their decolonial mouth is. It's no good talking and having us on panels and talking about what does an anti-racist economy and anti-racist tax system look like, because there are already people on the front lines in the global south fighting anti-imperialism. And it's important that we don't look at this work by dwelling on one economic policy or one colonial company or one slave ship or this university or that statue. We have to have a systemic view about the scale of the challenge, and let's not hide and obfuscate to the public about that. We need to start talking in the trillions. We need to not think that 40 trillion hidden in tax havens is actually something that's a big number. It's not a big number, because there's actually $40 trillion dollars traded per day in the financial and commodity markets, and Wall Street and London is the head of that, and that encapsulates the wealth of multinational corporates, the wealth of investment banks, the wealth of hedge fund managers, private equity firms. This is where political parties get their power from.
Thank you so much, Keval. Thanks so much. We are running very quickly out of time, so I just want to give my final thanks to John, Alex, Robert, and Naomi, who've been incredibly supportive of the agenda overall on tax and race. Just a quick reminder that the conference is going on for the next few days. Join every day from 2 p.m. There's some great sessions ahead. And over to Professor Brown for the final closing remarks. Thank you.
So I just want to thank you for inviting me. I want to encourage the work that you're doing. And my advice is to find your people, because when the attacks come, you need your people to help you get through it. So stay connected and support each other.
Amazing. Thank you so much. Wishing everyone a great evening ahead, and look forward to more for the next few days.